Oh, in our world, there's kind of two sides of it. The auto liability portion, that's part of that's the number one risk out there. And then obviously the wrongful repossession piece of the pie. The auto liability will always be the most challenging thing. You're trying to predict what's going on, and right now, as we touched on, the litigation funding. For those that don't understand what litigation funding is, it's these huge finance companies that are literally funding all these attorneys to go after and just solicit and find work, and they're going to pay them 100% no matter what, whether they win, lose, draw, they get it, and then if they win, they both split a little piece of the pie. So attorneys are out there soliciting business, and in this collateral recovery, this repossession world, they literally are targeting, many of them are targeting the space, and it's just coming more and more frequent. So that is a risk that's very challenging. The positive side, I look at it as a positive negative. There's less mom and pop shops out there because during COVID and whatnot, they just couldn't maintain. So the larger ones are getting larger, and it's a good and bad thing. The good part about it is the larger ones are sinking a lot of money into compliance, into training, into technology, into the telematics, the cameras, the AI piece of things to offset all these claims that are coming in. You never like to see people, stop and go out of business from the small perspective. But it's also, like I said, it's a positive that the larger players are investing more. The smaller players, not to say all of them are that way, but majority just don't have the means to put in the proper technology, put in the proper compliance and the training time to, really combat all this stuff that's coming at them. So it's a very big challenge. The wrongful repossession claims, like I said, they are just climbing, right? And the biggest challenge and success is these contracts. It's still, I would say around COVID back in 2020, over 80-90% of the contracts that we see from an insurance perspective were not written well. Both sides were kind of leaving themselves open, from a lender or the field agent. Either side was kind of getting stuck on different things that they shouldn't have. I would probably tell you it's closer to 50-60%. So huge headway, continuing to make big headway to make sure these contracts are written well. So when a claim does come through, the responsible party will take care of it. So huge headway is being made, but we're not even close to where we want to be. So it's a positive and negative both in itself.